Hello from Trend Signal for a review of the data and events of the week beginning the 24th of September. Well, global equity markets had a pretty good week last week, which sort of sets the tone this week, although a little cautious start, maybe because of the fact that the Far East was a little bit quiet with Japan and China closed for a public holiday. But last week, markets really did race ahead. Even our dear old FTSE tacking on 186 points, up 2.5%, largely as a result of a collapse in sterling Friday, following a slight hardening of the tone between the two, the UK and the EU Brexit agreement. That pushed the FTSE over 100 points higher. Anyway, 186 up last week. The Dow 588, S&P 24 points, so all really strong indeed. 306 in the DAX, and the Nikkei 775, probably the largest gainer on the week, 3.36%. But certainly in the US, the Dow S&P closed at record weekly high. On Thursday, the Dow Jones and the S&P both hit record highs, which apparently, according to the FT, is the first time both indices have done this together in 8 months. And as we approach the end of the third quarter this Friday, the Dow and the S&P are up 9.7 and 7.7% respectively for the quarter, which I suppose is not surprising, bearing in mind last week they tacked on, certainly the Dow tacked on 2.25%, so you can see how they quite easily got there with those sort of gains. Anyone taking money out of the US equities at the end of the second quarter may well be kicking themselves now, of course, unless they found something to beat the impressive returns in the US, which I can't think they will have done. Brexit does remain the dominant theme, as I mentioned, here in the UK. Theresa May struggling to sell her deal to Brussels. The slight fallout over that meeting and the way that Theresa May was treated. She needs to keep her own party on side, which I think she's largely doing. And more importantly, which is going to be a struggle, she will then need to get it through a vote in Parliament. Anyway, that's Brexit for you. It is not going away. As far as data and events this week, let's have a look at the Forex Factory calendar. A big week for global markets with the Federal Reserve meeting this week to decide on interest rates, and also the Reserve Bank of New Zealand. Let's have a look at it day by day. Monday, as I mentioned, there's a bank holiday in Japan and China. Lots of central bankers speaking this week as usual, always potential to impact the markets, but probably the most important one is Mario Draghi on Monday afternoon, 2 o'clock, testifying about the economy, which will always spark the interest for the likes of ourselves. Monetary policy, the economy and monetary policy for the European Economic and Monetary Affairs Committee. That's what I meant to say. Anyway, so that will be keenly watched on Monday. Fed Chairman Powell and the Bank of Canada's Governor Polk speaking on Thursday, plus Draghi speaking on Thursday, but by far and away the most important one, I think, is the Draghi speech on Monday. Tuesday, we have Conference Board Consumer Confidence in the United States, another sky-high reading, but slight pullback from last month's reading, but absolutely no problem with the US consumer feeling incredibly confident. Crude oil inventories, weekly crude oil inventories on Wednesday, another drawdown in stocks last week. So we expect another drawdown in this relentless trend again this week. The UK oil was struggling to break above this $80 level, but overnight news from OPEC saying that they've decided against further rise in output, which probably will anger Donald Trump, as the FT reports. A recent Twitter from Mr. Donald Trump saying OPEC monopoly must get prices down. Well, guess what, Donald? They've gone and decided not to raise output, which has pushed prices up sharply Monday morning. Crude oil just trading at 80.23, so that's up at about $1.50. So a significant gain on the back of that news. So maybe the inventory will not take such center stage, but I'm sure we'll be hearing from Donald Trump at some stage on Monday or Tuesday about that news. And the main event of the week for this week is undoubtedly the Federal Open Market Committee, the rate-setting committee for the Federal Reserve, U.S. Central Bank. Expect a rate rise, definite. It's almost a shoe-in when we look at the CME's swap rates, there's a 92% probability of a rate rise, which is pretty much a near certainty. But I think the fun will really start with the press conference. Also the FOMC statement will hopefully contain something worth reading. But then the press conference at 7:30, and the market will concentrate on the Fed's projections, the dot plot on interest rate projections, and any discussions about the impact of the US-China trade war, which, let's face it, today heats up again with the first imposition of this 10% tariff on $200 billion worth of Chinese imports into the US. And if nothing happens, there's going to be, if there's no progress, then this rises to 25% next year. So the stakes keep being ratcheted higher. The FOMC obviously matters to all markets, not just the US dollar and US shares and US bonds. It affects global markets as well, the EU, UK, Japan. Emerging markets are obviously vulnerable to a spike in the dollar should it happen. So a key event in our trading month. And then we have the Reserve Bank of New Zealand, the central bank in New Zealand, expected not to raise rates. There was a less than 5% chance of a move in rates, according to the markets. Thursday, core durable goods. This removes the very big ticket items such as aeroplanes, etc. But we're looking for a number of plus 0.4%, which is better than the revised plus 0.1% last month. And then, as we approach the end of Q3, we get the final reading of the gross domestic product in Q2 for the United States. It's the last of 3 readings, and reporting an unchanged reading of 4.2%, which is a very strong reading and just stands a mile ahead of anywhere in the Eurozone, EU, and the Far East, certainly in the developed world anyway. And then we mentioned all about the speakers, central bank speakers, and then we just jump to Friday. The UK current account, which is the difference between the value of goods and services imported versus those that are exported. The UK operates a large current account deficit, 19.4 billion. And of course, that all needs financing. So it's important that the UK keeps a weather eye on how it funds that, and interest rates, the exchange rate all have a bearing on that. And that's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.